I'd like to welcome you to Emerging Europe and the Asian Tigers Towards 2030, another in a series of events discussing business opportunities between emerging Europe and key global markets. My name is Andrew Robel, and I am the founding partner of Emerging Europe, an independent, London-based intelligence, news, and community platform whose mission is to contribute to the social, economic, and democratic development of the emerging Europe region by encouraging and promoting entrepreneurship, innovation, and sustainability. Emerging Europe needs to continue to be more visible on the global stage, and our organization helps by shining a light on this fantastic region and the unlimited opportunities it offers through our various programs, the Future of Emerging Europe and our awards, the Tech Emerging Europe Advocates community, our reports, and our news site, which is the primary source of information about the Emerging Europe region. Today, we are delighted to be able to bring Emerging Europe closer to the Asian Tigers, or the Asian Dragons, particularly to Korea, Singapore, and Taiwan, to jointly explore opportunities and share experiences. Here, I would like to thank Money Today and Drake for the opportunity to be part of the Key Platform Global Conference. In these challenging times, we need to build bridges that will connect and help us build a sustainable future for our countries, regions, and the world. We hope today's bridge between Warsaw in Poland with Seoul is a great start. I would also like to thank our partners, Techia Holding, a global expert in esports, IT services and infrastructure, and real estate development. PwC, our partner across the Emerging Europe region, and the Warsaw Stock Exchange, the largest stock exchange in this part of Europe, which less than 2 weeks ago celebrated its 30th anniversary and today is hosting us in its headquarters. I would like to use this opportunity to invite Marek Dietl, the CEO of the Warsaw Stock Exchange, to welcome you all to Warsaw. Marek.
Thank you very much, Andrew. Welcome to Warsaw Stock Exchange. I'm extremely pleased that we have this event today as Korean-Polish relations are at the peak of prosperity. We had 30th anniversary of our exchange this year, but last year we commemorated 30th anniversary of establishment of the diplomatic relations between South Korea and Poland after the fall of communism in Poland. This anniversary shows how close are the ties between Poland and Korea. Korean history is much longer than Polish one, it's few thousand years, but it's to some degree similar to the Polish history. As our president was a honorary, who had a honorary patronage over this anniversary, and I'm in my second capability, his economic advisor, underlined that both countries live between two powerhouses, and the history of those countries was driven by this neighborhood. And in this regard, we can understand each other very well. So we have to build up our competitive edge in the quite challenging environment, regionally, geopolitically, and so on. So this is, I think, crucial event for our financial markets to get closer, to learn each other better. So I'm extremely pleased to welcome our Korean friends, and again, thank you very much, Andrew, for having this event today.
Thank you very much. So in 2009, global index provider FTSE Russell promoted South Korea to developed market status. Less than a decade later, Poland was also reclassified to developed market status thanks to its continuous improvements in the capital markets infrastructure, supported by the country's steady economic progress. Let me now invite Tae-Jun Lee, the president and the CEO of the Korea Exchange, to join Marek and I in this fireside chat. Perfect. So, gentlemen, like I said, South Korea and Poland are both seen as economic successes. What do you think were the factors, the key factors that contributed to your country's economic success and the success of its capital market? I'll start with our guest in Korea.
예, 안녕하십니까.
Hello, everyone. It is a pleasure for me to be participating in today's talk. In Korea's economic success, I think opening up of our market was a major factor. We were able to increase our exports by opening up our market, and export continuously grew, which led to the success of Korea. And on the capital market success, I think I can explain major factors into three. First of all, we had the infrastructure of the Korea Exchange, and in the Korean exchange, we not only deal with stocks, but bonds, derivatives, ETP products, and so it is a comprehensive exchange. And we also provide trade-related activities, and we have a IT system that we have developed. And another important infrastructure is index development and market information, in which the stock exchange is responsible for, and this has led to a synergy effect. And we were able to reduce the cost and enhance efficiency. So that led to competitiveness. And we have great IT infrastructure, as I have mentioned. And we did not experience any IT glitches, so we were able to establish trust in the market about our system. And a second factor is that the stock market liquidity is another important factor in our success. For the past 10 years, the market was in a stalemate because the index was within a box, and most of the investment was made by institutional investors and foreigners. But from the mid-2010s, we are now seeing more individual investors participating in the market, and these individual investors have expertise. Also, we are seeing low growth rate in the real economy, and with the COVID-19 situation, we are seeing individual investors entering into the stock market, and they are more aggressive than in the past. This has led to an increase in the liquidity in the market, and KOSPI, the major board in Korea, the daily trading amount was 5 trillion, but last year it was 12 trillion KRW, which was double. And this year it has increased even more. And as of April, it is now 19 trillion won that is being traded on a daily basis. So compared to 2 years ago, it's almost 4 times. And on the IPO market, our main board, KOSPI market, in the past, it was traditionally about manufacturing. We had that type of status, but in the mid-2000s, we gradually, step by step, open the door to more listing of companies. In the past, there had to be certain standards met to allow companies to list on the stock market for the main board, such as certain profit levels. However, for promising companies, they could list on the main board, even though they do not have immediate profits. And with this, now we are seeing more forward-looking companies that have a promising future, such as bio companies and fourth industrial revolution companies being included in the stock listing. And we are seeing changes in the market, and which is leading to an improvement of the PER from 13 to 14 in the past, and recently it has gone to above 20.
상승을 하였고요.
Thank you very much. That sounds very impressive.
And
Marek,
furthermore,
thank you for now. I'll ask Marek here what contributed to the success of the Polish economy and the Polish capital market as well.
Well, to a large extent, we followed the strategy of South Korea in the early 90s. So we opened our economy quite rapidly. So our companies had to compete with the global peers. And the constant growth of Polish GDP, we tripled the GDP per capita, and extremely fast growth of export, mainly in the manufacturing and tools and machines, led to improvement of the economic standing of Poland. Stock exchange, for our viewers who are not familiar that much with the capital markets, just to give you a perspective, Korean capital markets is 20 times plus larger than the Polish one. So it's a huge success. Congratulations. But we have very similar development in the recent years. We were the fastest growing in terms of trading volume exchange in the European Union last year, 56% plus. We also improved the trading volumes in the first quarter of this year by 47%. So even after COVID, we continue to grow very fast. We are also a full range exchange with all the products President Lee named. Everything is there with us as well. We also run an energy exchange, so we are slightly more diversified, and we run it 24 hours a day. So we have a constant trading of electricity and gas and agriculture products. On top of that, the similar developments are down here in Poland regarding the retail investors. Polish capital market in early 90s, after communists were take all the wealth out of the people, were actually based only on retail investors who were illegally working in the other European countries and bringing some dollars, Deutsche Marks, or whatever currency they could convert of French francs, and they were investing on exchange. Then we had a great development of in terms of remote members, as we call them, so foreign investment companies, which gained up to 60% share in our trading volume. But the retail investors still maintain around 10-12%. But last year, the share of the retail investor increased to 25%, which, when you combine with the increase of trading volumes overall, we see that 3 times more trading volume is now created by retailers. And retailers or individual investors are a very important group because they are early adopters. So they are keen on using derivatives, especially futures. We are kind of futures market, and the same was observed in Korean stock exchange, where the futures developed in recent years very, very rapidly. What is, I think, also related to the higher retail participation. So as you see, we are miles away, but actually we have more in common than differences between us.
Thank you very much, Marek. So the role of stock exchanges as change agents, giving investors, issuers, regulators, and policymakers guidance to enhance performance on ESG issues and encourage sustainable investment. This is how we see the role of stock exchanges right now. How do you see your exchange's role in fostering that sustainable growth? The whole conference today is actually focused on ESG and sustainable growth. So how do you see that in your at your stock exchange? And I'll start with our guest in Seoul.
I think that when it comes to ESG and sustainability, we've been focusing on expanding disclosure requirements. And so we've been involved in various different activities regarding disclosure. So last year, we've announced that our commitment to TCFD recommendations, for example, and we focus on governance. We've come up with guidelines on disclosure related to ESG data. And early this year, we also presented a guidance to corporations on ESG disclosure.
This is all in line with our efforts to try to foster more of these corporations and listed companies so that they can understand the need for disclosure of information related to ESG, so that we can allow for transparency and more efforts in that regard, so that we can have more information about ESG. And as I mentioned before, we've developed a relevant index that we've supplied to the market on carbon effective Green New Deal index that we've developed last year. And we've also announced an ETF product that is linked to this index. So this could provide some sort of incentive to more companies to participate in active ESG intake. And in a bond market, we wanted to foster SRI activity. So we also installed an SRI segment in our bond market last year. And as a result, together with COVID-19, our SRI bonds, I have to say that the SRI bonds have been issued quite successfully this year. Their listed amount is about 100 trillion Korean won, which is quite successful for us. And as for ESG information, to all market participants, we want to enhance awareness for the market participants on the importance of ESG. So we are actively involved in education materials, training, PR, promotional materials, so that we can tell more people about the importance of ESG in terms of enhancing awareness. And so for people who present information and the consumers of this information, we want to narrow the gap between these two. And I think that our Korea Exchange has a very important role to play in that regard.
Thank you very much. Marek, how do you see the role of the Warsaw Stock Exchange in educating the market?
Well, educating is, of course, the key thing. So 15 years ago, we started Respect Index, because proportional index, so you cannot build a financial product on that. And 2 years ago, we started our first ESG index in our index factory, in our 100% owned subsidiary GPW Benchmark. Basically, what we do, there are two layers. One layer is that we help the companies do the proper reporting, our issuers, the proper reporting, and we cooperate with the European Bank of Reconstruction and Development, EBRD, on these guidelines. And those guidelines are now being presented, and there are some webinars for the companies. And there are even some templates of documents to make the life easier with ESG. And on the other layer, we try to explain to the regulators, policymakers, that there is a peculiarity in the ESG in case of Poland, as of course, when you look at our top ESG companies, you have mainly gaming industry, as we have over 60 companies in game development space. So actually number one in the world in terms of number of companies. And we have some, one financial or two financial institutions and some retailers. But obviously in the top ESG ranks, we do not have any companies which are manufacturer or there are energy generators. And Polish industry or power generation is based on coal, and it won't change that quickly. Of course, the plan is to get out of coal in about 30 years, but currently all the e-commerce, gaming, and so on, they consume energy, but they have much better ESG ranking. So they have ceteris paribus cheaper access to capital or weighted cost of capital decrease for them because they are more ESG friendly. But actually, the greatest contribution to the improvement of our environment decarbonization have the energy power generators or manufacturing companies, which have lower ESG score currently, so they finance themselves via equities or bonds, more expensive. So it's a completely ESG paradox, which we try to explain to the investors, to the regulators, as I mentioned. And what we created now is the narrative around ESG best effort. So we try to promote not only ESG, what is of course e-commerce tech space, what is great, or gaming and this kind, but we would like to promote among the investors those companies who have highest delta, so highest change, highest improvement in their ESG capabilities, and we reach quite a well this message is quite well received. We reach quite wide audience to that, and hopefully we will help our economy to transform, to become more green and companies more socially responsible and with better governance by promoting ESG best effort.
Gentlemen, thank you very much for this chat. Obviously, there's a lot that has already been done to improve the application of ESG frameworks, but there's still room for improvement, and we need to continue working on that. We are going to continue the topic of ESG right now, and I would like to hand over to Kasia Madeira, a news presenter at the BBC, and her panelists representing PwC in Central and Eastern Europe, KB Financial Group, Gazelle Finance, and Sung-Sil University. They are going to focus on, again, the application of ESG frameworks in international trade and investment, and they will continue discussing opportunities for the emerging Europe region and the Asian tigers. Kasia, over to you.